Good afternoon, everyone. Want today to talk about the gaps in SME finance. We are providing the Wi-Fi today, but we're not in the Wi-Fi business. My little business focuses on, I think, what was called a profitable niche. Medium-sized businesses, larger SMEs with family offices. But today, we're lucky we've actually got two people who are representing what is soon to become, hopefully, two challenger banks in the Australian SME market. So for the first time, I think we're hoping to see quite a lot of change. So I'll just introduce our panelists. Belinda Cooney from Macquarie, unfortunately, couldn't be here due to clients and having to travel to the US. She was very apologetic, but I'll try and weave in her investor perspective today. We've got Bronwyn Yam. Bronwyn is head of product at Tyro. Tyro, as I think you all know, acquired a banking license in 2016, became the first challenger bank in the SME market, the first technology company in Australia to be issued with a full banking license. Bronwyn has 20 years of experience in Australia and overseas, latterly held senior positions in Commonwealth Bank SME-facing roles. David is a co-founder and CEO of Judo Capital. Judo has applied to be to get a banking license, but 3 weeks ago opened for business. Looking forward to hearing from David, as one of the most experienced SME bankers in Australia, having run large parts of NAB, ANZ, Macquarie, and I think before Judo you were responsible for 90,000 SMEs. So welcome, David and Bronwyn. I just want to kick off. I think there's a lot of talk about SME finance, and I think the big question is, well, what is an SME? So I'm going to ask Dave and Bronwyn to explain what problem they're trying to solve, because I think we'll find it's quite different, and which is great news. So if we just start with you, David. The Reserve Bank puts out data saying that 9 out of 10 Australian businesses get the loan they need. So why go to the enormous effort to build a challenger bank? Why do that at this stage of your career?
Thanks, Dermot. I think that Reserve Bank statistic can be very misleading, frankly. I think all of those that have either experienced as a customer of or worked within one of the major banks kind of know that once the application is in the system, and it's already been pre-vetted several times, that maybe 9 out of 10 do go through. The fundamental question is, how many do not ever make it into the system? They are fundamentally not getting measured. And I think the 9 out of 10 gives a completely skewed version of, in fact, how much SME demand for credit is being satisfied.
So from your perspective of looking at SME banking over so many years, what's prompted you to get at and solve, what problem are you trying to solve with Judo Capital?
So, I mean, what we see is that the craft of relationship banking small business has been on a progressive decline for quite a number of years. And that fundamentally, as skills have been pulled away from the front line, as costs have been pulled out, as SMEs have been pointed into call centres, for example, that that the major banks who dominate 85% of the SME lending sector are moving further and further and further away from the relationship proposition that small business so desperately wants. And so we started with a blank sheet of paper to build what we see as the best relationship proposition to small business in the country. And that means a whole series of different things, but in terms of supply of credit to them, it means actually taking the time to sit down and listen to the customer, listen to them about what they aspire to, what they worry about, what their customers are, what their growth plans are, how their family is involved in that, and actually form a holistic view of the customer. In many ways, as we were talking before, it's kind of relationship banking as it used to be, right? As it should be. Making that full assessment and building connectivity and having bankers there that are spend years with clients, not months, and then as opposed to the question that SMEs get, which is, How much is your house worth? I'll lend you against that.
But all of that takes a lot of time.
Yeah.
So what's going to be your sweet spot?
We're targeting customers with a turnover of up to about 20 million with a max lending of about 5. We modelled ourselves on the UK challenger banks. We spent, a good 12 months looking at what made them successful, the niches that they drove into, the propositions that they delivered. And it's, that's that turnover of 20 million. And there's we think about 300 billion of outstanding there. And if you look at some of the Macquarie Bank research, they suggest that there's between 50 and 70 billion of unmet credit demand approx in that sector.
Okay, well, I'll just turn over to Bronwyn. So, Bronwyn, you had a very responsible position in Commonwealth Bank. Why go to all the bother of going into Australia's first challenger bank? And I think you've managed how many 100 engineers and things like that. What are you trying to do at Tyro to change things, and why?
So I think what we're trying to do at Tyro is really going back to similar to what David's talking about, understanding the pain points and the relationship as a whole, understanding what the SMEs are trying to do in this market. To your earlier question, what are SMEs? There's really no single definition of SMEs, regardless of how you define them by different industry vertical, how you define them by their operating model, what their needs are. They're all very different, and that's what makes this segment of the market so vibrant and so interesting. And that's what Tyro is trying to focus on, is really listening to these SMEs, because we feel that they are quite unheard in the larger banks because they are just part of the system, whether they've made it in the systems or not. And I guess the other thing is really going back to, they've got needs around cash flow, whether it's, I need to be able to pay my payroll in the next week because I've had a busy period and I had a lot of temporary staff that came through, to, hey, there was a really great deal and a inventory deal that I struck with my supplier, but I need to now settle that invoice, to large expenditure if they're looking into growing their business. So depending on that life cycle, there are so many different needs that make up the demand from the SMEs, and those are all the things that we're trying to uncover at Tyro.
And your customer base will go right up to larger SMEs, if I might call them?
Yep, correct. So we go from the 1 mil type turnover to about the 20 mil.
And doing merchant advances, or are you broadening your product range?
So our current focus is on merchant cash advance, so it's really about going along with their flow every day. So if they've had a really good day, then their repayment to their borrowing is higher. If they had a slow day, we recognise that, and thus there's no penalty or late fees as such as compared to the other banks. And our current offering is the focus on that.
Good. I'm just going to try and bring in some questions fairly soon, but before we do, I just want to focus on the main obstacles and challenges in opening up this market. We heard earlier from Equifax that there might even be a lack of supply in this market. And so I'm just trying to get at the point of, is there a lack of demand? When you read some of these reports, and I think I agree with you, David, that there doesn't seem to be a lack of demand. So when you look at the obstacles, because the easiest thing, of course, is to say, well, how much is your home worth, and lend against that, and I think that's where it got to. So in terms of when you're looking to do business now, in terms of credit decisioning, what are you seeing out there? What these companies, what are the obstacles? Because if they haven't got real estate, how are you going to approach that?
I think it's sort of very congruent with the first part of what we just talked about, which is kind of going back to relationship banking as it used to be, spending the time sitting across the table from the customer and listening. And, there's kind of the 4 C's of making a credit assessment, and the people that we're recruiting and the frameworks that we're building the platform is all framed around those, right? So the first one is obviously the cash flow of the business. How strong is the cash flow? How consistent is it? The character and the quality of the management, the capital that is already been built up in the business as a function. And then the fourth one is collateral. Yeah. But to your point, the system today has reversed that and stuck it on its head, and it's really, what's the collateral you've got? And there's none of that other, sort of more detailed assessment done, right? And that's what's central to us.
So to bring in some of the questions, so how do you do relationship banking well whilst competing on price? Just to deal with Judo for a second.
Yeah, so how do we deal with, well, so I mean, we build, remembering we're starting with no legacy, right? So we're starting with that blank sheet, which is no legacy technology or process or bureaucracy or systems or, committee, exactly what I mean, right? You start with a blank sheet of paper and you can build something that's very, very different. Your bankers are in the field 3 or 4 times more often than, the major bankers are, that they can sit across the table and make a decision, as opposed to it going up into the centre.
And finding those bankers who actually understand credit decisioning, do they still exist?
There are less of them, I've got to say, but we're currently recruiting 1 for each of the 17 applications we get, right? So the benefit of being relatively small in a comparative sense is that there is a real ability to cherry pick some really high quality talent.
And Bronwyn, so when it comes to the relationship, is relationship important in Tyro? How do you see that?
So we probably have a slightly different approach to relationship than to Judo. Given that our background is in technology, a lot of our relationship building per se is more in a digital way. And it's also about understanding and building that relationship between Tyro and our understanding of the SME's business operation through their data. So a lot of it is focusing on their FPOS takings for the day, how their business has been going over the last few years, and using that, building the relationship to understand the life stage of that business. And I guess, to the question about competing on price, the cost structures of fintechs are very different to that of the big bank. If we just kind of look at the big classification of overhead, we've got way less of that than the big banks, and so that gives us a really good lever to be able to compete on price, alongside with really spending the right investment in building the right capability, whether that's in bankers and relationships or whether that's in our technology.
We heard one of the panelists earlier saying, why be a bank and take deposits? It's just too hard. But this kind of, I suppose, gets back to the cost of capital. And one of the questions here is, so how will the cost of capital, cost of funds for challenger banks compare with the majors? How are you going to compete?
Yeah. So I've got to say that, we've spent a couple of years materially offshore talking to investors in the financial services disruption space, if you like, many of whom have invested in the challenger banks offshore and been very successful in doing it. So there is a huge amount of equity capital that, be it our first round, our second round, or our third round, that's sort of sitting on the sidelines, willing to back a true challenger in a market that's incredibly profitable, right? It really is close to the most profitable in the world in this sector. On the debt side, there are an absolute there's a plethora of both domestic and international players, financial institutions and funds that have got huge money to deploy, and that. So from a cost of funds perspective, we don't have that sort of zero interest, sort of low, lazy account balance money. Correct, that's right. But in terms of wholesale facilities from the fund and bank sector, we've got plenty. We'll then go to deposits once we get our banking licence, and we'll be able to compete very clearly with an ADI.
And I guess it's not all about price. It's about availability, relationship, things like that. Is that what you see? What's holding people back from borrowing? If we look at the figures from the Reserve Bank, SME borrowing isn't going up. I don't know whether it's because fintechs have grabbed it all, but when you add up the numbers, it doesn't really amount to that. There's $290 billion of SME loans below $2 million. It's flatlining. If you go back to 93, you saw that graph, it doesn't look very exciting. So what's holding people back from borrowing money?
So I think some of the things that are holding SMEs back from borrowing are headlines such as what we've seen in your video. We understand that SMEs are time poor, and certain segments of the SMEs aren't necessarily very robust in their financial knowledge. Their focus is actually in their craft, which is running their passion in the business. So when they see headlines and news stories, and when they listen to the radios, and when they hear our treasurer, our prime minister talking about perhaps, the economy isn't going well. If we cast back to the day, over in WA with the mining boom, a lot of that sentiment actually sits in the minds of the SMEs. And for them, they will be reflecting on, oh, well, if that's the case outside, what does that mean for me? Maybe I need to be a little bit more conservative. What if that happens to my business or that happens to my industry? Maybe I shouldn't borrow that much. So, as we interact with the SMEs, many of them are telling us that they understand that there are some instruments, that there are some avenues of which they borrow. But first thing that they go to is, well, I only know how to go to my bank because that's who I've banked with ever since I was little, or that's what I hear my parents and my associates talk about. But I don't think I can borrow from them, going back to David's point about the application doesn't even make it into the system. So for them, their mindset is, I must save up. And when they save, then they become a little bit cognizant or they become a little bit scared of the fact that they need to borrow. Because somehow borrowing doesn't necessarily carry a positive connotation. Sometimes SMEs think that if they borrow, it actually means that their business isn't doing well, and that's why they have to borrow. The way that we look at it is about education, helping SMEs to understand that it can be very healthy growth for them to borrow so that they can expedite the growth plans that they have to become successful. And these are some of the mindsets that needs to be changed.
Okay. Is there anyone in the audience who wants to put their hand up and ask a question? Because we're getting towards the end. Just want to make sure there's burning questions. I can pick a few more from here if time allows, just for one or two more questions. So are either of you going to offer a full banking service?
So no, I mean, we will start with quite a targeted suite of products initially, all lending product oriented, that will build into deposit products post the ADI, and then we will build out a broader offering from then. But we're not we are SME only, and we will always be SME only. We will build out products and capabilities relevant to that progressively, but we're not going to try to be all things to all people.
So you don't need to change bank to do business with Judo?
Correct.
But the danger is the banks, when they see you wanting to take the business off them, are they going to react? Are you worried about that?
Look, I think what we want to try and do is redefine what the best practice proposition is to small business. I mean, the four banks in Australia make, $35 billion of profit per year. I mean, albeit, we want to redefine the service standard in a relative sense. We're still going to be relatively small fry compared to, the behemoths that control the market.
And Bronwyn, full suite of products necessary?
Tyro currently offers services around payments. So first lead with our FPOS offering. We've got our lending product there, and we've got also a transaction banking capability that is part of us getting the ADI a year and a half ago that we started offering in the market. From there, I guess, similar to Judo, our focus is going to be on those type of really daily requirements of SMEs for them to run their business, not necessarily going into, say, for example, foreign exchange or insurance, what you see from the larger banks being the full service one-stop shop. But the current thinking and focus is SMEs, really, alongside with Judo, redefining how SMEs should be serviced, making sure that they are aware of all the different options that they've got on operating their businesses, who they can rely on as their banking partner to achieve the goals that they have.
So just one more question, I think, from the floor, which I think a lot of people are probably thinking, so I should ask it. So in David's team, so there you were running one of the largest business banks, if not probably the largest business bank. So when did the epiphany take place? When did you finally decide, enough's enough, we've got to fix this problem?
I'm not sure if there was a particular date. Look, I've been in banking for 30 years. The last 10 years of that was working in small business banking, and it was by far the most rewarding 10 years of my career. I love it. I mean, you get immersed in banking, the small business sector, and the people and the families and the passion for what they do, to your exact point, Bronwyn. I thought that all the banks, as they continued to industrialise their process and just, bankers now covering twice as many customers as they used to, and that they don't have delegated authority materially anymore, that we were moving away from something that, every small business that you spoke to kind of screamed out as being of the most value to them. And we saw that the UK regulator post the GFC, had created a fast track for challengers to try and help reform an industry to provide a better service proposition. So we did a lot of research on that. We got to know them very well, and we thought, you know, there's a real opportunity to do that here. So,
Okay, just to wrap up the panel, I just want to ask the audience a question. So, if you think we've got a demand problem in Australia where SMEs are pretty happy with what they've got, put your hand up. Anyone think we've got a demand problem where basically there's no demand for extra finance? It's not really a big problem. So anyone put their hand up think we've actually got a supply problem where basically it's not about I'm not talking about the lack of capital here, because I think we all agree there's a lot of capital, but is there a constraint in the market where SMEs are not getting the right funding options? I know we're kind of talking to the converted. Put your hands up if you think we've got a supply problem. Yeah, I think we've got a supply problem according to this room, but I think we're all a bit biased here perhaps, but I'd like to help get the word out. And thank you very much, David and Bronwyn, for your time. And I hope everyone enjoyed this panel. Thank you very much.